Alright, hello everyone, it's Acro. Today we're gonna answer one simple question. Is the Bitcoin bear market bottom already in? Or do we still have to wait a few more months before we get the final low and the start of a new bull market? So to answer that, we'll take a look at how past cycles behaved in terms of time, as well as the balance of green and red candles in previous bear markets. And we will also consider historical returns to then find out what is the highest probability time window for this cycle's bottom. And we'll even narrow it down to just this small time window where everything seems to line up for this to be the final bottom. So if you want to know exactly when that is, make sure to watch until the end. So the best place to start is the monthly time frame, because here you get a clear view of how perfect Bitcoin is in terms of cyclicality. And it's something most people underestimate greatly. For example, here, each bull market lasted 35 months, and the bear markets were all around a year. Right now, we are on month 9, so it seems a bit short compared to what's happened historically. And especially given the fact that this last bull market we just finished lasted exactly the same amount of time as the previous ones, we should probably expect this bear market to end somewhere in the neighborhood of the previous ones as well. So to get a better idea, let's go on the weekly time frame, because here we can get more precise data. And you can see that each bear market lasted 59, 52, and 54 weeks respectively. So what we can do is simply apply it to this current cycle. And we get the following dates. And you can see how close they are to each other. But what we can also do is simply take the average, which is 55 weeks. And that ends up late October. And from there, we can start to draw deviations from the average. For example, this is a 10% deviation zone from this average, which is between late September and late November. And you can also consider a 20% zone, which is larger and of course possible. But when you look at when the previous bottoms formed here in white, you can see that they were all within this orange box of plus or minus 10%. So once again, it would be kind of logical to fall within this area rather than outside of it. And one last interesting fact is that when you look at the cycles in their entirety, so not only the bear markets, and what I mean is from bottom to bottom. So we exclude the first one because it's not clear when it started, but for the last two cycles, they all lasted 204 and 206 weeks. And you can see that this amount of time lands perfectly into the orange box right here. So this adds a bit of confluence to this time zone. All right, so now I want you to pay attention to the actual dates where we expect this bottom, because if we take the 20% zone, it's between early August and the end of the year, basically. And we'll be taking a look at historical returns to get a better idea of what is most likely between a bottom in the earlier part of Q4 or the latest part. So let's jump into the historical returns. In case you didn't know, Q4 is by far the best performing quarter in Bitcoin's history, as you can see here at the bottom with the average and median statistic being the highest. It also has a great probability of closing green overall. And what this tells you is that Q4 is a very strong season for Bitcoin. So if we expect Q4 to be green and bullish, it will make sense for the bottom to happen rather in the first half of this period in order for Q4 to end green and to end bullish. But we can actually go even deeper in the analysis by looking at the monthly returns instead and focus on the latest part of the year, let's say between September and December, because that's roughly the window of time that we've been looking at. And here it should be striking to you that October is by far the best month of Bitcoin overall in terms of the probability of closing green, as well as the average and median returns. Then the second best month of Q4 is November, followed by December, and finally September, which is rather bearish. So what this data tells us is that we should expect October and November to be particularly strong. So it would be odd for the bottom to come in November or December, given the strength of these 2 months. Now when we go back to the charts and actually look at the average, you can see it was late October. And if we expect October to be bullish and green, and the same goes for November, then the logical thing to expect will be for the bottom to form before October, or let's say at the very latest in the middle of October, so that October turns green. So if we actually take the intersection with what we have so far, it will create a zone between, let's say, the 10th of August and the middle of October, something like that. And actually, to get an even better estimation, we can take a look at how the previous bear markets ended. So if we go back on the monthly time frame, you can see that each one of the previous bottoms always happened on a red candle. You can see here in 2011, in 2015, in 2018, as well as 2022. And even the intermediate bottoms, like in 2015 and 2020. And based on this data, it seems highly likely that in our current bear market, the bottoming candle will also be red. So when you think about it, if the last candle is red, it can't really be October if we expect October to turn green. Therefore, we can slightly move our window between mid-August and the end of September for the final bottom of the bear market. Now, this is great, but we can even go one step further by going on the monthly time frame. And instead of looking at the length of each bear market, we can actually go deeper and look at the proportion of green and red candles within each bear market and see if there's any pattern there that could be applicable to the current bear market, and maybe see what the next few months could be like and whether it aligns with our timing window that we've established so far. So we'll go one bear market at a time. So for the first bear market in 2014, when you count the candles, we have 4 green candles and 10 red ones. And you can notice that I've excluded the first candle because I consider it to be still part of the bull market. Now let's go over the second bear market. And here we have 3 green candles and 9 red candles. And once again, I excluded the first green candle. And then for the third bear market, we do have 4 green candles and 9 red candles. And once we zoom out, you can see a clear pattern where each bear market has contained somewhere between 3 and 4 green candles and between 9 and 10 red candles. So now the obvious question is, what do we have so far in the current bear market? So when you count it from the top, you get 7 red candles so far, as well as 2 green candles so far, because right now July is not closed yet. So now when we compare it to the previous bear markets, it seems like we are missing at least 1 or 2 green candles and 2 to 3 red candles. Now, this is when it all comes together to create a coherent picture, because if you remember correctly, we expected the bottom to come before October, which means it could be in July, August, or September. However, given this particular pattern of the amount of candles we need in a bear market, it seems like the minimum requirement for each category would be 1 green candle and 2 red candles, which makes up to 3. And that's perfectly aligned with July, August, and September. And that will be, in total, 3 green candles and 9 red ones, exactly like in 2018. But now, if you want to get the order correct, we can go back and look once again at the historical returns to get a better idea of which month is considered bullish or bearish historically. Here it's quite clear that July is historically very bullish. In fact, right now we just started the month of July and we are already at plus 6%. So it seems highly likely that July will actually close green. And when it comes to August and September, these two are actually quite bearish months, especially August, that has been red a lot of times and has the worst median return out of any month of BTC. So the most probable scenario would be for July to close green, August to be red, and September could go either way, but probably red as well. And now when we go back to the charts, it would mean that July will most likely close bullish. Then we will most likely have a bearish August that closes red. And for September, it will look like a red September. And not only that, it will probably be the bottom of the bear market because it will fall exactly within the window we've established so far. And then from here, we are probably looking at a bullish October and November and the start of a brand new bull market. Therefore, to sum up everything we've seen so far, it seems that September is the perfect place for this bear market bottom for the following reasons. First of all, it's right before October and November, which are typically very bullish for Bitcoin. The second reason is that they will be actually pretty close to what we've seen in the past bear markets in terms of time from the top. And finally, it will align with the amount of green and red months we see typically in a bear market. So this is the final adjusted window right here. Somewhere in September and probably in the latest part of September seem to make the most sense. Now, of course, this is a market, so anything and everything is possible. And we could actually be bottoming right now, or we can bottom in October, November, or even next year. But here we are talking about probabilities and what is most likely to happen given the perfect cyclicality of Bitcoin that we've observed so far. So I think it would be foolish to go against such a strong cyclicality. So I really hope you liked this first video on my channel. And if you did, make sure to subscribe and turn on notifications to not miss the next ones, because I'll put the same amount, if not more effort, into each and every one of the future videos. So thank you all for watching. That was Acro. Bye.